Welcome everyone to Richardson Capital Management's Economic and Investment Update for the first quarter of 2021. I'm Mark Steele and I'm joined by Dan Brown, our Director of Investment Management. Dan, it's been a pretty decent start to the year. Stocks are broadly higher. Bonds, however, are having the opposite effect as they're reacting a little bit negatively to the rising interest rates. But we've seen a $1.9 trillion fiscal relief package from the Biden administration, and the supply and the pace of vaccines against the COVID-19 virus are approaching 3 million doses a day. But what I can't believe, Dan, is it's been a whole year since the bear market sell-off, since the pandemic started. How is the market reacting a year later?
So with the 1-year anniversary of the bear market low from last March, we see stocks up significantly. So we went back and looked at all bear markets from 1957 through the most current bear market. And what we see are pretty strong gains off the bottom as financial conditions improve, economy improves, etc. And with this most recent bear market recovery, very strong gains, much stronger than average. So we just passed the first year, and now as we enter the second year and we look out, we still see some pretty positive things. So corporate earnings should grow, the vaccination is ramping up, etc. So we still see gains further ahead. And what we see in that second year traditionally is stock market returns that are slightly above average, but generally you get a correction along the way, and we wouldn't be surprised if we saw a correction here sometime in the second year of the recovery.
So, I touched a little bit in the beginning about President Biden with his American Rescue Plan in March. He's actually got another project coming out in early April, is that right?
Yeah, so Biden administration is already talking about an infrastructure plan, and we've seen estimates that it could be between $3 trillion and $4 trillion. So again, that's on top of the $1.9 trillion that was just passed in mid-March. And back to the $1.9 trillion plan, the one thing that's noticeable to us is the direct payments to consumers to the tune of $1,400 per person.
So Dan, the Fed met in March. What was our takeaway from that meeting?
Monetary policy according to the Fed is going to remain unchanged, which basically means Fed funds rates is going to be anchored towards zero for an extended period of time. And also they're going to continue buying bonds to the tune of $120 billion a month for the foreseeable future, which we think that could last easily through the year, into next year. And then another big takeaway is the fact that they raised their growth expectations for GDP, gross domestic product, up to 6.5%. So they're looking towards a pretty strong year for economic growth, which has some people concerned about inflation, and the Fed has commented on that. And one of the indicators that we look at here at Richardson on a regular basis is what we call the velocity of money, which is basically just the turnover of money in the economy as it's flowing through the economy. And what we've seen is that for the past 15 years or so, that trend has been steadily lower. And it went meaningfully lower during the pandemic because you had the economic shutdown. You couldn't spend a lot of money, even if you wanted to. So we expect that to pick up in the near term, but we don't think it's going to force the hand of the Fed because we expect inflation to kind of go back and revert to pre-pandemic levels where, again, that's an environment where the Fed can remain easy with monetary conditions and interest rates should stay low for an extended period of time.
Yeah, something to keep a watch on. We want to just recap the first quarter for you. We've got stocks are off to a pretty decent start. We've got a lot of vaccinations going on, up to 3 million a day. We're going to keep our eye on corporate earnings, some taxes, and some spending that's going to come out of Washington. But for right now, Dan, the outlook, would you say it's still fairly positive?
Still very positive, but wouldn't be surprised if we had a correction sometime in the next 12 months as we enter the second year of the recovery.
Yeah. So again, thanks for tuning in. If you or your friend have some questions or would love a conversation with Richardson Capital Management, please reach out to us. We're always here to help.